Hello everyone, welcome to a new video. Today I will be discussing and analyzing the company of Brilliant Earth, which is a small cap that sells jewelry, which in my eyes is at an attractive valuation. If you have been a follower of the channel for some time, you might have already heard of the company because about a year ago I made a video in which I was analyzing it. If you didn't watch it, I will leave it here above and also down below in the description, and I would recommend that you watch it if you don't know or have no information on what Brilliant Earth does, especially the first 5 minutes where I introduce a bit the company and talk about some relevant information. Today, however, I will be focusing just on analyzing the results for the fourth quarter as well as for the full year 2022, mostly to monitor how the company's performance has been so far, now that it has been publicly traded for about 1.5 years now. Jumping into this, we have that sales in 2022 were up 15.7% compared to the prior year. At first sight, this number might not seem very good, considering the growth rates that they had in the past 2 years, which had been of 25 and 50% year over year, and of course now 15% is a substantial slowdown from that. However, if we break down the sales, we see that the total order ships were actually 26.6% higher than in the prior year, but the problem was the average order value, or from now onwards AOV, which decreased from $3,216 to $2,940, which was a decrease of 8.6%. Essentially, if the AOV had remained constant, the sales would have increased about 26%, which would have been a really good number. The other good point was the gross margin, which came in at 53.3% compared to 49.3% in the prior year. Normally, this would be an indicator that could suggest that potentially net income margins would have also increased. But unfortunately, this was not the case, as these were of 4.3% compared to 6.9% of the prior year. This led to net incomes reported of $19 million compared to $26.3 million of the prior year. And the main reason for that, basically the fact that the selling, general and administrative expenses increased 43%. As of the end of the last year, 2022, the company had 591 full-time employees, so FTEs, and 15 part-time employees. This compares with the end of 2021, in which the company had 420 FTEs and 9 part-timers. So they have increased about 40% the workforce, with sales that have only increased 15.7%. So here we might have the main reason while the net income margins were compressed. Overall, the results were kind of mixed, leaning a bit towards the negative side, but which I see with positive eyes, as the economy lately has also not been doing great, and there have been many large corporations like Meta, Amazon, Google, or many others that have also been reporting pretty weak numbers, and at the end of the day, Brilliant Earth still managed to grow at double digits while remaining profitable, of course with lower net income margins and everything we have mentioned until now, but still with some solid numbers. This is talking about the full year, but focusing just on the fourth quarter, we have that it was quite weak with a 1.9% drop in sales, again due to lower AOVs despite higher order volumes, and a drop in the net income margins from 9.4% in the prior year to 5.2%. The good point though was that the gross income margins increased to 54.7% compared to 51.1% in the prior year. On these fourth quarter results, I don't want to spend too much time because I did want to highlight them just so we see a bit where the latest trend is going, because this drop in 1.9% of sales is quite relevant. But at the end of the day, I prefer to have a look at the full year results because they are more representative, as quarters can vary a bit, also depending on the state of the economy, but overall it's good to see that the trend is positive. If we take a look at the balance sheet, we see that the company is very well capitalized and has a conservative debt ratio of 64%. The balance sheet is very solid with $154 million in cash, which could basically pay for almost all of the liabilities, all of the debt that they currently have. And additionally, the company is cash flow positive, which means that they don't really rely on external financing for the company to sustain their operations. Going now into other relevant metrics on a yearly basis, we see that the revenues by region have increased substantially in the USA, but remain pretty flat internationally, which means that the company is less diversified geographically speaking as compared to last year. Currently, Brilliant Earth has 25 showrooms, which are 10 more than it had in the prior year, and they are all located in the USA. And showrooms are basically physical locations where clients can also see and try their products. Let's talk now about the insider activity and shares outstanding, which is a topic that is often overlooked, but that is very relevant for us as shareholders. Starting with the insider activity, the last time that an insider bought shares was in May of 2022, so about 1 year ago, in which one of the directors bought 20,000 shares at a price of $4.53 per share. Since the beginning of last year, there have been no sales by insiders, or the sales done were for exercises of stock options, which they are granted on a regular basis, but all the insiders now own more shares than they did a year ago, and this shows the confidence as well of management in the company and the fact that probably they think that the current share price doesn't really match where they see the company going in the future. The company went public back in September 2021, so it is also interesting to see what has the evolution been of the shares outstanding. Basically, in the past year, these have decreased in 0.24%, which is not a massive decrease, but what I like to see is that they have not issued more shares and diluted shareholders. Because when this is done consistently over time, so diluting shareholders, this usually doesn't lead to very good results for shareholders that were already in the company. And usually when you are diluting a lot, it's because you need to raise capital, because maybe the company is not doing as well as you were expecting, and unless you are having very high growth rates to justify the dilution and the issuance of more shares, in many cases this leads then to poorer performance basically. Finally, on this section, let's look at the equity-based compensation, which in case you're not familiar with this is basically extra shares that are issued from the company and given to directives of the company just so that they are aligned with the business and of course to keep them motivated, and it's also part of the total reward or compensation packages that the companies are offering. So usually they have the salary, but also they grant shares of the company. In 2021, they spent on that $2.8 million, and in 2022, they spent $8.8 million. For 2021, since they just went public towards the end of it in September, I don't think that it's very representative, but for 2022, the equity-based compensation represented 2% of the total sales for the year of the company, which I believe that it's a pretty sensible amount. So I'm not seeing any crazy numbers here in terms of equity-based compensation, which unfortunately is the case for other companies, even some that I unfortunately have in my portfolio, but as a shareholder, I like to see these numbers. Now that we have had a look at many numbers, let's go and see what their outlook is for this upcoming year 2023, as well as their long-term growth targets. Their outlook for 2023 is for the company to report between $460 to $490 million in sales, which would represent a growth of between 4.57 and 11.39%, which is essentially some pretty slow growth compared to the figures of the previous years. The other metric that they guided for is the adjusted EBITDA, which is expected to come in between $17 to $32 million, and that is a decrease of between 18 and 56% from what they reported this year, which was already not very good and lower than the previous one. And overall, not great numbers, which are also a bit of a reflection of the economic situation, what we have already been commenting at the beginning, but at least it seems like the company will still continue growing and remaining profitable. But how do these numbers and the ones from 2022 compare to the long-term growth targets of the company? Well, they want to have gross margin in the mid-50s, which they are already almost basically at it, with a growth target of 20 to 30% in sales. And here we already know that at least in 2022 and most likely as well in 2023, they will not reach that. Then the marketing percentage of sales needs to be in the mid to high teens, so between 14 to maybe 19%. And this, unfortunately, it's very hard to track because they don't give a number for the marketing expenses, but just grouped under selling, general, and administrative. And adjusted EBITDA margins of 15 to 20%, which these are currently at 8.9%, expected to drop also in the following year, so in 2023, so they still have a lot of room here. And last year they were at 13.3%, so the prior year. Overall, I don't think that the goals are very unrealistic, but in some cases they do still have some work to do, which is very understandable as we are still talking about a small cap which currently is capitalizing at around $337 million. Now, before finishing, I would like to compare the numbers of Brilliant Earth with the two other competitors that I used also in the previous video that I made about a year ago when analyzing the company. And then we will also look at the valuation. On the numbers, we see that the growth rate in sales was very similar to that of Charles & Colvard and also Pandora, but the net income margins of the company are still below those of the competitors. Then on valuation, we have that Brilliant Earth is currently trading at 17 times earnings from 2022, while Charles & Colvard is trading at 11 times and Pandora at 10.5 times. Personally, although the company is trading at a more expensive valuation, I think that the potential for growth is significantly higher at Brilliant Earth, as the other two are relying more on physical stores, which usually means slower growth potential or at least more investment needed for the growth. And also Pandora is quite of a large company and very well established already. Plus, Brilliant Earth is a digital native company which is using, and I think will be able to improve even more this, the data generated by the website and by the purchase behavior of the clients, of the customers, to create better digital experiences. Overall, I am quite comfortable being a shareholder of the company, and actually recently I even bought more shares of it as it started dropping more. Although it is true that if we enter a recession, maybe sales won't do as well, and probably that's what we are already seeing with the numbers that they reported last year and also the ones of last quarter, their guidance for the following year. Rich people will continue buying jewelry, and marriages are pretty stable as shown in the graph on the screen. Maybe people will spend less on the ring or on the jewelry, but I'm pretty sure that they will still buy. For me also as an investor, I'm investing in this company for the long term, so a potentially weak performance within the next 1 to 2 years is not something that is worrying me a lot, especially because if this happens, it's probably because of a general economic slowdown, which is something that happens always with the economic cycles. We just go through a boom, we start spending, then we crash, and then it keeps just going, and this is just how the economy works. And we've been through this before, so yeah, I'm just pretty sure that when the economy rebounds, Brilliant Earth will be able to benefit massively, and I think that their numbers will improve significantly, talking about orders, average order values, and also they will probably have higher net income margins as people have more money then to spend on these things. Anyways, please remember that everything I share in this video is just based on my opinion, my research, and my calculations, which of course could be wrong, and I take no responsibility because you should always do your own due diligence whenever investing in this or any stock. With that said though, I will leave it for today. What are your thoughts on Brilliant Earth? Let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.